Welcome to Asymmetric Edge. I'm Will, and this channel is all about bringing you clarity and conviction in the markets. Before we dive into tonight's market outlook, I want to give you a quick background on who I am and why I started this community. I've been actively trading the markets for over a decade now. I cut my teeth in options, learning the hard way, making mistakes, and slowly building a process that focused less on predictions and more on managing risk and identifying asymmetric opportunities. Over the years, I've traded through different market cycles, from the bull run after the financial crisis to the sharp sell-offs to the COVID volatility and now into the AI-driven environment we're in today. Each period forced me to adapt, but also reinforced that discipline, consistency, and position sizing matter more than chasing headlines. One thing I learned is that most retail traders lose because they don't have a clear framework. They get lost in the noise. I built Asymmetric Edge to share the process I've developed, the same process that's helped me survive drawdowns, capitalize on opportunities, and steadily grow over time. So what you get here is not hype, not stock tips, but a structured approach, weekly outlooks, daily trade breakdowns, and insights into how I think about risk and edge in real time. That's a quick snapshot of my journey. Now let's get into what's happening in the markets right now. Big night. We've got some fresh headlines around Google, ripple effects across the mega caps, and some interesting moves in semis, software, crypto, and metals. I'll walk you through the setups I like, the levels that matter, and how I'm thinking about risk into the back half of this week. We zoom in a little bit here on the SPY. You see we gapped lower this morning and then reversed hard into a classic hammer close. On the daily, you can frame it as a long-legged doji followed by a close back above it. It's constructive, but it's not necessarily confirmation. I'm not calling it all clear, but I'm respecting this reversal to go back higher. Now, let's jump over to the SPX because I know a lot of you guys like to use that. Our reference level here is 63.60, right here, this blue line. It's the bottom of this doji. If we lose that, I want to know immediately, so I have an alert set there. All that means is all these buyers today are gone and are overtaken by sellers, so we're more than likely going to go lower if this breaks. We jump over to the NASDAQ. On the hourly chart today, if you look here, market was pulling back, but there was a positive divergence on the RSI, which kind of let us know ahead of time that things could reverse and go higher. Gave us some good opportunities to make some trades on the bounce today. Now, after hours, we had some big news on the Google decision. Reuters flagged a sealed ruling in the Google search monopoly case. Some key points were there's no forced breakup of Chrome, no forced divestiture of Android, and no order to stop paying Apple for default placement. There is a data sharing requirement, though, with competitors, and Google will likely appeal that. Google was the cheapest of the mega caps. With the overhang reduced, I'm watching the top of the after hours flag, right up here where this white line is, right around 229, 230. If we clear on volume tomorrow, I'll look for continuation entries against this anchored VWAP pullbacks rather than chasing the first spike. As you can see here after hours, Apple benefits indirectly. Payments will likely continue, which supports their services. Reference points for Apple are 230.72 and the 240 round number overhead. Meta trades well in the read-through, but I'll have to keep an eye on it for more details. If we take a look here, Microsoft after hours lagged. I'll watch relative strength tomorrow and keep sights tighter in software if it continues to underperform. Now, if we jump back over here to SPY and take a look at the RSI on the daily, we're not oversold. We're not even close to being oversold. We just simply stopped going down. That's different from a full washout. Respect this reversal, but keep your risk antennas up. Protection is cheap right now, so I'm comfortable carrying small hedges while the tape resolves and figures out what it wants to do. Now, let me walk you through this Google trade here in a little bit more detail. What I like to do when news hits a stock and it rips, especially after hours, let me clear this off. I take an anchored VWAP and I place it right when the news came out. I'll buy any kind of pullbacks into this anchored VWAP as long as it holds and sell into the strength. Now, the reason I like to use these anchored VWAPs is because it tells you where everybody's at who bought down here. And if you're just going to buy breakouts like this with no process, that's a great way to donate to the market. As long as it holds this anchored VWAP, it's usually going to continue higher. If it breaks below, it's a pretty good signal to get out and let it figure itself out. Now, we've got two pretty big earnings left this week, CRM on Wednesday and Broadcom on Thursday. CRM is a read on enterprise spend, and it's down about 8% since its last earnings report. So I'd like to keep a pretty close eye on it and see how enterprise spend is looking and what their guidance is looking like. AVGO is basically the AI plumbing. If guidance wobbles, semis can reprice quickly. So you're going to want to keep a close eye on AVGO's guidance and what their earnings numbers look like. Now, if we take a look at the SOX, the overall semiconductor ETF, we opened at the lows and closed near the highs. I still see negative divergence on some indices. I'm treating strength as a place to manage risk, not married positions. We had a few software standouts. MongoDB closed well relative to its peers, but it's wedged under its resistance from its gap down from its earnings last December. I'll keep it on the focus list for follow through. It'll be big if it can get a candle above this and close. CrowdStrike is washed out after this huge green reversal candle. It's very rare that you get a candle like this and just instantly reverse back below it. We dipped below it today, as you can see with this little doji, but buyers stepped in to make sure that we closed above it. I think this could be a good sign for reversal for it to continue higher, but we're going to need some more confirmation. I like to monitor put and call walls while trading to find zones where dealers may want to defend. When price sits between a call wall above and a put wall below, you tend to ping pong until a catalyst. If you don't have a paid feed for these, you can kind of hack it with alerts tied to distance from moving averages or abnormal volume. Keep it systematic. As you can see on this put wall here with AVGO, it was good resistance until it finally broke above. Came back down and retested it, but it pushed higher. You want to keep an eye on this level, as this is where a lot of dealers want to defend or go below. Bitcoin's came back down and retested the neckline of its handle and bounced. On the 4 hour, it's given us a lower low, then a break back through. Short term, it's very constructive and likely to outperform Ethereum here, but we'll keep an eye on it. As you can see here on gold, it printed a textbook breakout. It's been trading in this channel. Today it finally broke out and closed above. I'm looking for gold to go a lot higher here. I don't want to chase it though. I'll look to buy the first orderly pullback rather than chase this initial thrust when the tape just feels exhaustive. I don't want to donate money to the market. Quick plan going into tomorrow. On Google, I'll stalk these VWAP pullbacks above the after hours flag, fail back into the flag on heavy volume, and I'm out. Apple, I'm going to watch those levels we mentioned before, the 230 to 231 level and the 240 above. Above 240 with participation in volume, and a lot of momentum traders will show up, so it should be a pretty easy trade. AVGO into Thursday, I'm going to keep my size disciplined and keep an eye on the guidance risk for the AI complex. SPX, don't forget about our level here with our alert at 63.60. Below it, I'm going to get a lot more defensive. Otherwise, let's let this reversal play itself out and prove itself. I'm going to continue to maintain small, cheap hedges while volatility is so mispriced and allowing us to have cheap insurance for our longs. Now, if you like this style, levels, catalysts, and real trading process, subscribe and drop a comment with a chart you want covered tomorrow. For deeper dives, daily recaps, and live trade breakdowns, join the Asymmetric Edge community. The link to the waitlist is in the description. The next round of invites will be going out sometime this month, so make sure you get your name and email on that list so you can join the community. This is just a quick snapshot of my brokerage account from the last year or so. If you want more verified trading results, I've got videos, I've got all kinds of stuff on the site. Go check it out at asymmetricedge.org. If you want more education, more in-depth breakdowns, more trading processes, make sure you get your name on the waitlist so that you can be on the next round of invites for the community. And I'll see you in the next one.